Hello, this is Joe Pryor, the virtual real estate team in Oklahoma. These are going to be a series of pre-recorded videos. We're going out of the country for 3 weeks. And so I just kind of wanted to keep the ideas about investment real estate going. I will be doing my Monday post for the next 3 weeks, but those extras aren't going to be there. So on this first week that we're gone, that you're going to get this video, I want to really talk about interest rates again in terms of what I think is happening. Now what we saw was inflation being a little bit stubborn, came in at about 3.7%. We were looking really good for investors with a buy down on 25% down on a 30-year fixed mortgage. With a buy down, we could go down to about 5.99. However, after that came out, then the rates went up to about 6.15, then about 6.25 for investors. It's always going to be higher for investors on Fannie Mae. Now, in the meantime, Janet Yellen, the Treasury Secretary, has come out and kind of not necessarily contradicted Jerome Powell, but said, I'm not worried about inflation. I think it's going in the right direction. Now we'll see if that conversation that she had with the press is going to make a difference this coming week when you're getting this video. My suggestion is it probably will. I don't know if it's going to go back to a low of 5.99 on 25% down, but I would think at least 1/8 of a point is within shooting distance of what's going to happen with the market next week. But we'll see when that comes up. And on my Monday updates, I can comment a week from Monday on what happened. Now, the other thing that we know is that there is nothing coming in March unless something exceptional happens. Let's say new inflation comes out and it's really zip, but that probably won't happen. It pretty well indicated May being the first possibility of a rate cut. And so because of that reason, if you're waiting for the rates to be cut, you're going to be waiting quite a while. And then the problem is you get out of the prime rental season in a lot of markets, because a lot of markets, when you're buying a single family home or something that's in a school-driven market, then you need to be around when school starts and stops. And so if you're into August or September, the supply and demand changes. The demand is not quite as great. Like in Oklahoma, for instance, school is going to start about August 15th, maybe in some cases earlier. And so end of July is kind of towards the end of the season. And so you have to be careful about that. And again, once interest rates are cut, then prices go up. This is what happens because everybody is based on what do I owe on this property. And so that means that if you're buying new construction, they're definitely going to go up. So understand that what's going on right now is what we call a lot of jawboning. In other words, what Jerome Powell and Janet Yellen are trying to do is move markets with what they're saying, not necessarily with what they're doing. So we'll see what happens at the March meeting. That is going to be extremely important in terms of what these two folks are saying, especially Jerome Powell and the Fed. But rates are not that bad. We still have a lot of properties in Oklahoma City and Tulsa that have positive cash flow. My suggestion to people again is 2025 is the refinance year, because we're going to have some more reductions in 2024, more coming in 2025. So the economy keeps going the way that it is, it's going to be May.